If there's one learning that the COVID-19 pandemic has taught us, it would be that a good insurance cover is a must-have. A large enough cover is key as it would help in assessing all kinds of treatment at the hospital of your choice and also in rooms of your preference. But the reality is that we are staring at rising healthcare inflation, especially after the COVID-19 pandemic, which has pushed up that minimum recommended health cover that one should have from 5 lakh rupees to 10 lakh rupees. So what really should be that ideal cover for you? In this video, we explore some of those factors that can help you decide the ideal health insurance cover for you. But before that, do like, share and subscribe to Moneycontrol's YouTube channel for more such content. Let's dive into the details of what you should be looking out for while buying health insurance. Firstly, you should keep in mind the city of your residence or the place where you reside. If you live in a metro city, you most definitely will need a larger health cover. Health expenses vary usually from city to city, from a Mumbai compared to a smaller city like Indore. And even if you do not live in a metropolitan city, you ought to take into account hospitalization expenses. One will also need to account for the travel expenses in case you need to travel to a bigger city for advanced treatment if the need arises. Secondly, if you are someone who is very particular about the facilities that the hospital provides, you may need a higher sum assured. Say for instance, you are not comfortable sharing a room with another patient. Then you will need a comprehensive no room rent capping policy. In such a case, there are chances of a 5 lakh policy getting used up in no time, and hence you may need a higher cover. Let's move on to factors like age and health history, which are quite crucial while buying a policy. The older you get, the need for a larger health cover becomes imperative as there are higher chances and frequency of illnesses, including chronic sicknesses. Now, more often than not, we tend to add our parents in our family floater covers. However, it's best not to include your parents in a floater plan, as aging parents would mean a higher number of claims, which in turn could exhaust that total cover quickly, leaving others in the family quite vulnerable. A better solution in this case would be to check if your employer allows you to cover your parents for an extra premium or offer that voluntary top-ups. Do not let go of an opportunity if so, even if that premium seems higher. This helps with the coverage of pre-existing diseases and also smoother claim settlement process, which will then make up for that additional premium outgo. It would be ideal to buy a separate policy for your parent when they are senior citizens. Let's address one of the biggest dilemmas that one faces while buying an insurance policy. Is a 10 lakh cover enough, or is a 1 crore cover worth your while? Now, a minimum 10 lakh cover has almost become a must-have in today's day and age. It removes those restrictions such as the room rent limits, proportionate deduction, as well as co-pay ratios, which means that a 10 lakh cover should take care of those basic healthcare emergencies. But it's always tempting to go ahead and buy a 1 crore policy as they seem much more affordable. But let me remind you here that the time of those annual renewal insurance premiums could actually get hiked from time to time, and if so, then that premium for that 1 crore cover will go beyond your budget. Now see, a 1 crore cover is primarily needed only if there is expensive treatment procedures that you're planning. And simpler option instead would be to either buy a critical illness product that offers a lump sum upon diagnosis of that illness specified in the policy, or to then enhance your base healthcare insurance policy by adding a top-up or buying a full-fledged high-value plan. Simply put, you need to strike that balance between the features that you want and the premium that you can afford. Always keep an eye out for any sort of future requirements too. So if you are someone who's aged between 35 and 40 years, you can start with a 10 lakh cover, and every 5 years, you can review or enhance this cover, taking into account your lifestyle changes, your health status, and other circumstances. I hope you found this video informative, and for more such content, tune in to Money Control.